Focus brought to you by IG, taking a look at the top crude oil producers and what they have to do with trading forex. There's, of course, a lot of correlations to be drawn between crude oil prices and certain currency pairs, as certain economies have a lot to do with crude oil production. It's a big part of their economy, Canada for one, but also you'll see some other major economies on the top producers list, and maybe some that you didn't think were that big of a power. But also, crude oil is primarily priced in US dollars. And so there's this theoretical relationship that doesn't always have to play out. But essentially, the thinking goes, for all else equal, for essentially no news in crude oil, let's say, if the US dollar is appreciating, then crude oil priced in US dollars is maybe depreciating relative to that stronger US dollar, and vice versa. If US dollars are depreciating, crude oil priced in USD might be appreciating theoretically. And the flip side of that argument goes with this theoretical conversation as well. If nothing is going on in USD, crude oil appreciation and crude oil falling is outside of that US dollar piece. But I wanted to draw not theoretical arguments today, some hard numbers. We're going to throw a lot of numbers at you and really illuminate today's theoretical relationships are great. Textbooks, sure, whatever. What's going on in the markets? And let's start with those top oil producers. You might be surprised by a couple of things here. I was surprised by a couple of things, and we're going to draw in the top producers from 10 years ago to further illuminate some of these surprises. One, United States, the top oil producer, any country globally. And not only that, but by a pretty fair amount relative to Saudi Arabia and Russia. And this is actually from the 2022 Enerdata consensus here of crude oil production globally. And in the last couple of years, with the Russian-Ukrainian war and the war in the Middle East, the U.S. has, if anything, maybe increased its, I can't say it's increased its oil production, but its relative lead as the top oil producer, I would potentially speculate has increased. Now, of course, I don't have the facts for that. No one does, because this information does lag a little bit. But yes, large lead for the U.S. Also, though, it seems like a lot of production, right? That seems like a lot of metric tons of crude oil, a lot of barrels. And also just a couple other highlights before I show you the 10 years ago version of this. This is consistent with the U.S. being 21% of total production. So almost a quarter of the world's oil coming from the U.S. That seems wild. I would not have guessed that in a million years. And then also, maybe I would have guessed this, between the U.S., Saudi Arabia, Russia, and Canada, they account for, those top four account for 50%. And good for you, Canada is right there in the top producers. And now that piece is pretty consistent. The Canadian spot at number 4 from the past, they went from 216 to 279 in the current state. The U.S. has made a jump from not only 524 metric tons to above 700, a gain in production of 45% in about the last 10 years or so. But they also made that jump from number 3 to number 1. And a couple of things. Production itself has also increased. And that might make sense now. There's more people on the planet, more demand for this energy source. But keep in mind that this trend is occurring in the same time that we're getting different alternative energy sources and cars that are run on electricity and not crude oil. So really interesting from my standpoint to see just this trend in general of the U.S. taking the number 1 spot, the U.S. increasing oil production by 45% since 2014. And and yeah, just the increase in production in general. Now, the increase in production in general doesn't mean so much for today's story, but that U.S. jumping from number 3 to number 1 could have a lot to do with the correlations that we're about to see. But let's take a look at crude's price now and get into some of the nitty gritty numbers of the actual trade, which you're probably here for. Prices have held above $70, even with this added production in the last couple of years here. And a lot of it has to do with increased demand. We have seen, an expansion of the global economy since the pandemic. But also, there's no two ways about the ongoing geopolitical tensions in Russia and Ukraine and in the Middle East, just going back to our top oil producers, directly having something to directly very close to number 2 and number 3 on the list here of the top oil producers. And so the geopolitical tensions really causing a lot of the spikes higher. And the reason that part of the reason we were in triple digits for crude oil a couple of years ago, above $100, was one, the economy coming back online. But the economy came back online post-pandemic, the same time that the Russia-Ukrainian war was really kicking off there, and people were worried about oil coming out of Russia getting hindered by all this. But that being said, been able to hold above $70 here, crude oil's price has, as you can see, really since the pandemic crash and then rebound. The $70 level has been really the lower end of it. And you go back to 2014, and you're seeing a lot of sub $70 prices in there. 70 has been around the historical average, give or take a couple of bucks, going back the last 20 years. But yeah, needless to say, crude oil has been more expensive than average in recent years. And now this is where you tie in that original conversation, the theoretical conversation around US dollars, crude oil, negative correlation, right? Well, you see that negative correlation for a lot of the last 20 years. But the last couple of years, I mean, I'd be remiss if I didn't point out that the dollar's been on a historic bullish run the last couple of years amid all the rate hikes in the U.S. and globally, but more aggressively in the U.S. The dollar is appreciated immensely against the Japanese yen. Has had also bouts of great appreciation against the euro, the pound, the Australian dollar, Canadian dollar. And so how can that be that crude oil has been more expensive than average in recent years, and the dollar has had this historic bullish run in the same time when historically the energy commodity and the dollar have moved inversely? And you look at, say, if you put your eyes on the middle of this chart, you can see from 2010 to 2020, you can see that negative correlation where, in 2010 to 2014, crude oil prices are moving back to the upside post-financial crisis. And U.S. dollar relative to yen here in this example, a major forex pair, U.S. dollar is kind of circling the lows at that time. U.S. dollar is bouncing back in 2014, 2015, and crude oil is moving lower. And you get some of that negative correlation, the inverse price action. But zeroing in on the last couple of years here, again, crude oil has had higher prices and dollar has had higher prices in the last couple of years. But both net higher since the pandemic there, and they've been trending. It's not even necessarily that the dollar moves higher and then it stays flat, and then crude oil moves higher and then it stays flat, and then the dollar moves higher. They've trended higher at certain points together. And you can see even most recently, as the production story has kind of ramped up of, wow, the U.S. is actually accounting for a lot of crude oil production. In the last 12 months or so, you can see the dollar and crude oil kind of rallying and falling together in pretty tandem, close approximation there. It's been pretty close. Now, of course, these correlations can absolutely change, and that's where we're going to end on in just a second. But I wanted to take a look, and I crunch the numbers, looking at, usually when we run correlations, we'll look at a 3-month period. That's a good amount of time to kind of say, okay, it's enough data, but I'm not necessarily taking the whole historical relationship, because these things, everything changes so consistently. The 3 months is usually a good amount. The 3-month correlations right now between crude oil and some of the major forex pairs, negative 0.81 for pound and crude oil. That is insane. That's such a strong correlation for two assets in different asset classes, a commodity and a currency here. Really, really strong. I mean, you'll see 0.8 correlations, for example, positive 0.8 between like an Apple and a Microsoft, as an example. I don't know what the correlations are right now, but as an example, like two stocks that are in the same sector. You'll even sometimes have two stock markets that don't have a positive 0.8 correlation, let alone, pound and crude oil, negative 0.8. So what does that mean? Just to kind of fully illuminate this, a short pound dollar position would be aligned, given these correlations in the major pairs and crude oil right now, would be the most aligned with a long crude oil position. Buying pounds would essentially be a short crude oil position. And that's historically over recent months. Of course, these correlations can change and nothing is guaranteed here, but you go on down the line and similarly strong. I was so surprised how strong these correlations were. Aussie, negative 0.74, euro, negative 0.69, dollar Swiss franc, positive 0.65. And just keep in mind that's flipped. So strong. This is all strong correlations, positive correlations between dollar and crude, and negative correlations between other currencies versus the dollar and crude. Even Canadian dollar, Canada, number 4 on the list. Historically, crude oil and Canadian dollar have been positively correlated. We talk about, colloquially, the Canadian dollar as being a commodity currency, with crude oil being the commodity. Canadian dollar, negative 0.63 correlation. Dollar CAD, positive 0.63 correlation. And then dollar yen, the one that we led off with the example, is actually the weakest of them. The pound, negative 0.8. Holy smokes. And here you can see the price action. It's been pretty inverse, especially the last couple of years. And obviously that data, again, is just the last 3 months. But keep in mind, these correlations can change. You take a look at 2020 and the dip in pound and crude oil, and then the bounce back in pound and crude oil, showing kind of a positive correlation in that period. These things can change all the time. Everybody knows relationships change all the time. But the current relationships between forex and crude oil, pretty wild, but might have a lot to do with the fact that the U.S. is a top crude oil producer.